In this video, we're going to talk about how to prepare a manufacturing statement and an income statement for Presley Manufacturing Company. We've done income statements for merchandising companies, but we've not done a manufacturing statement for those companies that produce their own products. So that's what we're going to go over today. And you'll see I kind of already have it laid out here for you. I've got a drop-down list whenever you have to put an account type or account name, and then over here you put the numbers, and the box will turn green if it's correct and red if it's wrong. So the very first thing we have to do is figure out our direct materials. We've got direct materials, direct labor, and manufacturing costs. Remember, we covered those in the last video. So the first thing we have to figure out is direct materials, and you always want to start with what was your beginning inventory for your raw materials. Okay, we're figuring out direct materials. So beginning inventory for raw materials, and you scroll up here and see that raw materials beginning inventory was $14,000. Key that in. And then the next thing we have to do is figure out how much do we purchase in materials during the period. And that should be up here as well. It's right here. And it is $216,000. So 216, and then you fill in raw materials purchased. Alright. And then the next line is you have to subtract your ending raw materials. So we have less ending raw materials inventory, and that is $44,000. Since it's being subtracted here, we want to put it in as a negative. Okay. And then we add those all up to get our raw materials used. So if we come up here to the sum function, we can use that, and it will add up all the numbers right above. So it's $186,000. And then sometimes there's indirect materials, so we'll have to subtract out any indirect materials if there are any. So remember, there's direct materials that we put directly into direct materials, but this is just the raw materials. The company is going to buy a bulk batch of raw materials, have them sitting in inventory, and they can either pull those out and they become direct materials if they're directly traceable to the product, or they could be indirect materials, like something that is used in the product, but it's not worth, it doesn't cost as much, or it's immaterial to trace it directly to the product. So those become indirect materials, and they would be part of manufacturing overhead. So we need to subtract those out if there are any to figure out what our direct materials are. So let's go back up here and see if it tells us any indirect materials. I've got direct labor, I've got indirect labor, but there is no indirect materials. So we just put 0 here. I wanted to include that in this step because it is an important step, but we don't have any for this particular company. They didn't have any indirect materials. So now the next step is to figure out what our direct materials used is. So you subtract the indirect materials used from the raw materials used, and it's still $186,000 because there were no indirect materials. Okay, so that's our direct materials used, $186,000. And then direct labor would be the next thing that we're going to figure out, and I remember seeing that up here, so let's go back up here and see how much that was. Direct labor was $468,000. And then we've got our manufacturing costs. So our overhead, manufacturing overhead, we got to calculate that. We'll go up here and see if there's any indirect things that we need to account for. Okay, depreciation expense for the manufacturing equipment. That would be an overhead cost, and that's $50,000. Manufacturing supplies used, that's 40,000, so up to 90,000 now. Let me just pull my calculator up. So 50 plus 90, I'm sorry, 50 plus 40. And then we have indirect labor, that's 36. Rent expense for the factory would also be a manufacturing overhead. Selling expense would not, but other manufacturing overhead of 126 would be. So you should get $280,000. So let's go and plug that in. So now we have all three of our manufacturing costs. We've got our direct materials used, our direct labor used, and our manufacturing overhead. So now we have to sum those all together, and that's $934,000. So then we have to add whatever our beginning work in process was and subtract the ending work in process less to come up with our total cost of goods manufactured, because this is what we added during the period, but we already had some inventory in work in process, so we need to add that to that. So our beginning work in process was 20,000, and then we transferred some of it out because we finished it during the period, so we have to subtract out the 56,000, and again, because it's being subtracted here, we want to enter it as a negative. And then we sum these three numbers together to get our cost of goods manufactured. Okay, 898,000. So for the merchandising companies that we've done in the past, that would just be cost of goods sold. But since we're manufacturing these products now, it's cost of goods manufactured. Okay, so then the next step is to create an income statement. So again, we'll go up here and look at sales, and it is 1.4 million. So we'll plug that in. And then we have to figure out what is our cost of goods sold. So our beginning finished goods inventory plus our cost of goods manufactured less our ending finished goods inventory. So we know what our cost of goods manufactured is because we just calculated it right here, right? So it's 898,000. But we already had some goods in our finished goods inventory at the beginning of the period, so we need to go up here and find out what that number is. Beginning finished goods was 128 and ending is 92. 128 and 92. 128. And again, because we're subtracting this, we have to put it in as a negative. So what this is doing is we got our beginning finished goods inventory. That's what we had in inventory at the beginning of the period. We manufactured some more products that were now finished, so now they get added to the finished goods inventory, and then we have to subtract out what we have at the end of the period to figure out how much we actually sold. So that would be our cost of goods sold. So again, I just need to sum these three numbers and come up with cost of goods sold of $934,000. Then the next step in the income statement process is to subtract your cost of goods sold from your sales. So I'm just going to do a formula here. 1.4 million minus the 934,000. So that's the cost of the goods that we sold. So we should get gross profit of 466,000. And then there's a hint over here saying the selling administrative expenses section should be listed from largest dollar amount to smallest dollar amount. So make sure you're always reading these little hints in your homework files. So let's look and see how much is selling and how much is administrative, so we know which one goes first. Administrative is 60 and selling expense is 72. So let's enter selling expense first, since it's the largest. And then our administrative expense will come after. So 72,000 and 60,000. And then it's asking us to add those two together. to come up with a total. So let's do that. You get 132,000, and then all we have to do to come up with our net income is to take that gross profit and subtract out our total selling and administrative expenses, and that will be our net income, $334,000. Okay, so you'll have a problem very similar to this for your homework. Hopefully this will help you get through that one.